Welcome to the Rachel and Cassandra Show. Before we begin, our disclaimer. Rachel and Cassandra aren't attorneys or financial advisors. They are, however, licensed in their respective professions.
Hi, everybody.
Oh, I was waiting for you and we did it at the same time. Go ahead, sis.
Yes, I was delaying to see if you would go. I can never start without saying like, hi, everybody. I got to figure out a different filler phrase, but
This is your filler phrase, which is talking about how you don't have an intro that you love.
I know. And it's literally because coming from a vacuum to just start talking feels really weird. And usually I've already caught up with you like, hey, how's it been? Blah, blah, blah.
Yes. So we talked about sweatshirts, weird sweatshirts, big, freaky, hideous things that you still love, fashion things. Yes.
Well, let's talk fashion. But for this episode, we are here to talk about credit and specifically what your credit score is, what you think versus the reality. And we're going to break it down. Before we get into that topic, though, I wanted to share a wonderful voicemail that I got from, it's weird to read a voicemail, but I'm going to do it if you don't mind.
I don't mind. I love this shit.
It made me think of you. So I received a voicemail that says, hi, my name is Leslie Stratus. And this message is for Jack Kennedy, which is wrong. But let's keep going. I'm calling because I'm a field auditor. I'm calling from the Michigan Mortgage Protection Office for your loan out there on East Side Road in Howell for about $175,000. I'm trying to follow up with you about a case that I have open for you in our system. I'm just trying to verify some information about the case and find out if the case needs to be open or be closed. If you could call me back. It goes on to give contact info, again, states that she is from the Michigan Mortgage Protection Agency. And I am 100% certain that there's no state entity called the Michigan Mortgage Protection Office. And are you Googling it, Cassandra? Because I did.
Yeah, I cannot find it.
It's not a real entity that the state runs. And this voicemail is designed to get me to call her back out of fear. It sounds very official. It feels very official. She has a case open she knows about my loan.
But she doesn't know if the case needs to be opened or closed.
Yeah.
Which is fucking weird.
Super suspicious.
Open my case. Close my case.
Yeah.
We're calling about a case. What does that even mean?
So, and I did not call her back because I know that this is a scam. This is phishing. She's either trying to sell me a refinance or a line of credit or something on my house. Cassandra, what else?
I think she's trying to sell you mortgage protection insurance, which is essentially if you die, your mortgage is paid.
Yes.
I think it's that.
Quite possibly. And if anybody wants this phone number, I'd be happy to share it with you. Maybe you can find out and let me know. What I wanted to bring to you guys is, one, your mortgage is public record. So any ding dong who knows where to look can go find out how much you took out and when, figure out what your interest rate is, ballpark your amortization schedule, and get within spitting distance. If you made your minimum payments for an X amount of time, they can get within spitting distance of what you owe.
You want to know where they get this information? Like the fastest route?
I know, but yes, I would like you to share that.
So the fastest route is to in my opinion, is to get a title company to do the work for you. And they will literally churn you out a very detailed list of names, addresses, mortgage type, loan amount, and the date it was recorded.
She's talking to me, I think. I don't think any Yahoo can call up the title company in their town and say, can you give me a list? Title companies will do that. They can.
You can buy it.
But that's usually...
Yes, they will.
Yes,
because
you can
New
buy
York
it.
Life sells what that woman called you about,
listen,
and they literally can go to the title company. But they
people
can go to the county clerk too. I'm sorry.
Yes, but our listeners, I don't think are telemarketers who are selling scammy products. I think people who pay attention to our show are people and other professionals. So I think if like Joe Ding Dong wants to go find, I guess I shouldn't call Joe a Ding Dong.
I love Joe Ding Dong. Any Ding Dong. All Ding Dongs.
All the Ding Dongs. And inappropriate Cassandra shows up again. I love it. Okay. So anyway, this is publicly recorded information and you can get it from your county clerk. Is it the county clerk?
Yeah.
County seat, somewhere they have it on file. So just be warned. This sounds official. It's just another sales tactic.
Yes.
A distasteful one, in my opinion. Someone reputable is going to tell you why they're really calling.
I get phone calls after people buy a house and go, "Hey, I got this voicemail," and I go, "It's garbage. I promise. It's junk mail, junk phone calls, spammy. Don't send them money for your deed." We've talked about that, but that's not the topic today. Today's topic is
there's a good
another
segue.
Truth versus go for it.
Yeah, there's a good segue because if you are if you're putting together a cold calling list, you may look at people's credit scores. Understand who's a good credit risk for the product you're trying to sell, or maybe a low credit. Someone with a low credit score may be more easily fear-mongered into buying things they don't need that sound official. I don't know. Anyway, there's a giant rabbit trail of weeds right there. But what we want to talk about is how your credit score is more than just a number. You don't actually just have a credit score, do you?
Not, because there is actually no uniform algorithm to generate a credit score. So again, there's no set way to generate that score. There's no one score. Do you want me to just throw a diarrhea litany of information at you?
I do, because these are all things that I did not know until I was in this industry. And people out in the world, and I deal with them every day, come to me and say, "I want to buy a house for this much money. My credit score is," and I'm like, a number you've been told is, and it represents something, but consider the source always. Your credit score for a mortgage is actually a specific product that your lender needs to go ask for. So on that note, I'm going to do a lot less talking because this is really your wheelhouse.
Okay. I'm just going to really briefly hit on variables, right? So there's no uniform algorithm. And I have some of this written down so I don't forget because there's so much. So I'm just going to write, what's the math where you do 10 to the 10th power?
Exponential?
Right? Is it okay. So so we can exponentially go into a world of hurt, right? So there's 3 credit bureaus: Experian, Equifax, and TransUnion, right? And each of those 3 credit bureaus gets different information from your creditors because
do they buy
the creditors
information?
No. The creditors can choose to or can choose to not report to certain things. Like sometimes certain collections will go only to Experian, but TransUnion never sees them, right? Something like that. So there's 3 different credit scores. There's thousands and thousands of creditors that may or may not report to all 3 bureaus.
I was just going to make that correction. There are 3 credit bureaus and a multitude of scores.
Yeah, so there's 3 credit bureaus, thousands of creditors that report to some or none or all of the 3 credit bureaus, right? And those 3 credit bureaus have different score modulators, right? Meaning it depends. If I could curate my own score, right, based on specific data. So mortgage data is requested, and the score that results is different than what my car insurance guy would see if he requested my credit report, because they want different data than what my mortgage company does, and they put different weights on different things, and that information is proprietary. Yay. So it's very specific, and the 3 credit bureaus don't share with one another at all.
So
over and above, go ahead.
I'm going to just interject with some regular language that says, what I tell my clients is your mortgage credit score, or any credit score really, is a numeric representation of how profitable you are as a borrower, right? It's a risk It's a number that just says how much risk and how likely am I going to make good money off of you.
I would say, yeah, it's risk. So, um, so there's three bureaus. There's thousands of creditors who may or may not report to the three bureaus. Those thousands of creditors report at different times each month, right? So Chase reports on a different day than Capital One. So you have different scores at different times of the month, depending on who has reported and obviously what your activity is. So it's this constant wheel of flux, which exponentially can change. And there's hundreds of types of reports within each bureau. So if you're looking, it's very, very difficult. So that's what I wanted to preface is the inability of uniformity casts this really gray cloud on credit. And everybody here is like, what's your credit score? As if there's fucking one.
Yeah.
And there are thousands.
Well, and we've been led to believe, not like there's a big they out there trying to deceive us into thinking there's a credit score. I don't mean that, but we've really been led to believe that we have a credit score. If you think about
Yes.
Credit Karma and other products, all my credit cards and banking institutions now are like, opt in to receive your credit score. Well,
Yes.
it's a credit score
that
through
day.
Yes, and it's through a certain filter that they have chosen, and it's a snapshot at this point in space-time, and it's nebulous. It's going to change, could change tomorrow. Or I had this happen. Is now a good time to share a short story?
Sure.
Yes? Okay, that sounds like a yes. I didn't really know this until I was in this industry and I was helping a client buy a house. And said client had a healthy score. I'm going to make up numbers because I can't remember. Let's say his score was 710 and he was going to buy a house and we went house shopping and he couldn't find anything. And he was like, you know what? I found this piece of vacant land I would like to buy. So he applied for a mortgage, a loan to buy the vacant land instead. And his credit score I didn't know his credit score for the vacant land, they were not willing to lend to him. And I was like, okay, so he can buy a $250,000 house, but he can't buy this $80,000 piece of vacant land. I was outraged. I happen to have a connection at the lending institution who is a decision maker for lending is Greenstone and James Cole. He's amazing. I'm happy to say his name. I know.
Everybody, if you need vacant land, just call Greenstone in Michigan. They're amazing.
So here's what James Cole told me. He said, your client has this credit score for buying a house, but for buying land, we purchase a different product to determine our lending, whether or not we're going to lend. And your client is not inside of that box. And then he said, however, I can completely see why, and I can override that decision, which points back to why you want to work with professionals who know what they're doing. Because I don't know that that conversation happens if you're doing an online.
No, it's just no.
Yeah.
Well, so I went and did my due diligence. It's been a while since I looked and validated, but so I just looked at a credit report that's like less than a week old.
Mm-hmm.
Oh, and there's different credit vendors too. There's like 500 different places.
What does that mean? What does
provide a credit report?
Oh, like
they provide a credit report, like to me or
freecreditreport.com. Is that what you're talking about? Or my credit union who gives me a credit report? No, it's not what you're talking about.
No, I mean like professionals who deal directly with Experian, TransUnion, Equifax, and their neutral third party to ask them for the score. So when I order credit, I don't ask Experian for their score. There's a middleman who gets me that score based on the parameters I've set.
Oh, so I have a question.
Go ahead.
When you do that, who provides the number? And here's why I ask. I just requested my own credit report from Experian, Equifax, and TransUnion. And I got these amazing detailed reports with no number. And every freaking lender, this was for procuring a lease. And the landlord was like, but what's your number? I'm like, here's 13 screenshots from all my lending institutions. Which number do you like?
So that's the thing is, did they want you to pay for your number?
It was an option. And I could opt into all of these protection monitoring services. And I just don't do that. I think it's...
No, you shouldn't. Yeah. So, but that's a side conversation.
Yeah,
so let me finish with, yes, you can
the third party. Oh,
Yeah. So for a mortgage, there's so much to whatever. I'm trying not to rabbit trail. So for a mortgage, what I ask for and what works for Fannie Mae, Freddie Mac, Rural Development, FHA, VA, right? What works and what they will accept. From Equifax, I order the FICO Classic V5 FACTA. From TransUnion, I ordered the FICO Classic '04. From Experian, I ordered the Fair Isaac VR2, VER2, so version 2. So those are the technical names of the reports from each of the three bureaus. What most people see,
it's
and
a
I believe we
product.
have, yes, that's the product they purchased. And I do want to go into a little bit of the history of that. But if he could bring up um, the one that says my credit repair guy on the bottom, not the breaking down your credit score flyer, but the other one. Yeah, Vantage scores versus FICO scores. So what we use are essentially FICO scores on a mortgage. It's a specific type, there's a specific name to it, but what most consumers see when they're looking at the free ones that your credit card provides or Credit Karma is going to be the Vantage score. So the Vantage score was created by Experian, Equifax, and TransUnion. And there's different, and you can even see there, there's a few listed, right? There's even one that was created in 2014 to put less weight at medical collections
Yes,
and
I
add
remember
your
this.
rent. Right, and add your rent. If you think that those cross over, because we're ordering a FICO, you would sadly be mistaken.
Yeah,
Anyway,
there was
so you
so
can
from
take that screen down. We'll put that up in the
put a link
comments,
to
the
it.
link to that. Yes, I'm
Yeah, super
sorry.
important because it does a really good job of showing how each credit score, the number, is a product with different weights applied to different factors depending on
Mhm.
what the creditor is looking at. And when
Depending on
I,
what we want. Yeah.
in my search to find credit scores to provide to this landlord, I had these exhaustive reports. And then I went to all of my banks and downloaded theirs. And they need something with your name on it and the number on the same page. Good luck fucking getting that. Finally, I found one on one of my credit cards. And the spread on the numbers was like over 60 points. So they're
Yes.
totally different, skewed representations of me as a credit risk.
Yes. So I do want to say that, oh boy, which path do I walk down?
Do one
Um,
of them and then go back and do the other one. Let's do both.
okay. So the first path I wanted to walk down, which I haven't yet, is the very first credit score was created in the 1950s by Bill Fair and Earl Isaac. The Fair
Fair
Isaac.
Isaac.
And it turned into the FICO. It was an absolute dud. It was the very first time they tried to create an automated scoring system, and it was not great, frankly. But they were trying to do that because up until about the 1970s, you got a loan based on who you were. And I love the Bailey Brothers building and loan analogy because I fucking use it all the time. But really, it was like, this is my buddy John. He's a good dude. You should loan him money. I mean, it was literally who you knew, and they didn't have to loan you money if they didn't like you, right? You borrowed money where you banked
And who you
and
knew.
and who you knew. So that's how it was in the 50s. It was
Can I
really
stop?
character-based lending.
Yes, I just got to point out that Bailey Brothers Building and Loan is from It's a Wonderful Life, in case you don't know that. I know you know
Google
that,
it. I know
but
that.
people may not know.
I know. Adam watched it for the first time like 5 years ago with me.
Yeah,
Anyway,
crazy. He was not
yeah,
raised
it's
right,
nuts.
obviously.
So I just don't think his parents liked it. So anyway, it was all character based. In the 50s, these two dudes tried to create this thing to like score people and really get this up on the ground. Kind of like, you know how the first credit card was Diners Club?
I
Like
didn't know that,
very
but yes.
specific to restaurants. Yeah, so like they're trying to do something and it's fucking weird, and they're asking people to like, well, just tell us if they pay their bills on time, right? Trying to figure out how to put a good risk number at people. So that's where it started from. And then in the 1970s, um sort of changed because the Fair Credit Reporting Act was passed,
And
right?
what
And
was
so it
what
kind
was
of,
that?
boy, you're going to have to look that up because I'm not going into all the
You
government
keep
shit, but
talking. I will Google.
it basically said, put what is reported and how it can be used to impact the score. So rules were put behind it. It was like the Wild West of right character lending, and let's put more weight to that and less weight to that. It really regulated what information can even be sent and how long it can stay there, and then obviously tweaks over time.
Okay, I found it. Federal law helps to ensure accuracy, fairness, and privacy of the information. It just regulates how the data can be used.
Yeah.
Makes sense.
So anyway, so it started with character based, and then it, grew into like there's rules, and this is what can be reported and what can't be reported and how long it can stay on, right? The tweaks happen, and which is awesome. But then there's all these sub ones because like the mortgage person wants to know this and the insurance person wants to know this, right? And my credit card wants to know that. My credit card might care more about if I keep they don't give a shit if I pay my house on time, but they might really care if I max out my card and I just roll with it forever. That might
And
be their determiner.
here's a classic example of a person who may not qualify for any mortgage, but qualifies for a $60,000 or $70,000 car note.
Yes.
It's a real thing.
I just got a car. What's your interest rate on the car?
Well, it can be confusing to the consumer though, because the car dealer's like, yeah, no problem. We got you $70,000. Take your pickup truck. And then house, sorry, nope, your score is not good enough.
Price point.
What's that?
Yeah. Nothing. I said it's always a pickup truck at that price point.
I know.
But
or a Tesla.
So so we're talking about what the truth versus reality. So the truth is, in a nutshell, there's a ton of different credit scores, right? That's like really what the reality is. What you see as a consumer, you're going to see what you can see as a consumer are bullshit credit scores that no creditor uses because it's served to you. I'll say that. And almost everything that's served to you is going to be higher than what is served to a creditor because the creditor views risk differently.
Yes, than you do. And it's designed to make you feel good to some degree.
Yeah.
One of my reports, I was like, man, I am doing awesome.
I am killing it. But so I do want to say, and he can bring up the other one, the breaking down your credit score. You can get so we'll put this document in too. It just kind of breaks down the different parts that go into your credit score. 70% of your credit score is almost 70%. It is your payment history, on-time payments, and how much of your credit you use. So my God, people, keep your balances below about 30% of the available credit and pay your shit on time. Literally never miss a payment. If you have a bad month and miss paying all 3 credit cards, you will probably lose 70 points, perhaps more, and it will take you a year or more to get them back. So you can go ahead and get that gone, but it's devastating. It is such a gigantic portion. So I recommend people look at Credit Karma. I fucking hate Credit Karma, but they are good for one thing, or annualcreditreport.com. Those are both good for one thing: seeing what's on your report. Don't pay for your score. Don't look at your score. See what's on your report. See if there's anything erroneous. Are there weird collections? Is your balance reporting high? Is everything accurate? So do take a look at that at least once a year, if not more, just to make sure there's nothing fraudulent, just to make sure everything's reporting correctly. That's what they're good for.
So I have a couple of probing rabbit trails. They're short,
Probe
though.
you ding dong.
So number 1, that's fair. The 30% credit to use ratio.
Yeah.
Hypothetical situation where I have 3 credit cards. They each have a $10,000 balance. Does it matter? Because my available credit cumulatively is $30,000. If I put $10,000 on one credit card, is that different than if I put 3.33, if I divide it up between all cards?
It depends on the type of credit report that is gathered. So generally, I would say it's the same because at the very bottom of the credit report, there's a utilization. There's a little chart and it says credit utilization. Um, and then it breaks out revolving cards from installment loans, right? Like say you just got a new $70,000 vehicle and you've only made 3 payments. Well, your credit utilization on that line of credit is really high because it's got a 5-year payoff and you just started or whatever.
You owe so
So
much because you've only
you
made
owe
2 or 3
yes,
payments. Yes.
student loans. Student loans, if you have not started repaying them, will blow your credit utilization sky high.
Except for right now,
And
because they are still in deferment.
nope, because the balances are still there. And many
Yes.
times the original line of credit was $5,000 and now it's $8,000 because people are
Well-
waiting for them to be forgiven. But so
well-
you're like way over 100% now.
I guess it depends on when your loan's closed. And that's a different episode, really. You're
Yes.
right, of course, as always. I have a personal situation with a student loan right now. I borrowed 10 grand to finish my master's program, and I haven't paid a dime on it because interest went to 0 and it's been automatically in deferment. Is it deferment or forbearance? Forbearance, and it keeps getting extended. So though I have the money to pay it off, my money is serving me better somewhere else right now.
Yeah.
And it's not hurting my score that I know of. And maybe it is.
So the weird part, this is total side conversation. A lot of people had their credit score increase tremendously with that forbearance of student loans because they were rolling late, right? People just like forget about student loans. They're like 3, 4, 5 payments back.
You're getting green X's.
Yeah,
green check marks.
You went from like late, ignoring me, not paying me, ignoring to like fucking perfection. 2 years of perfect on-time payment history because no payment was required. So they're in great shape. So if you're a student loan avoider, your credit score's probably gone up just by proxy on those trade lines anyway.
And take the opportunity to start actually making those payments on time right now and continue to reap the rewards of those false on-time payments. Because you really just got, but it's, you've given this advice before, and it's not, take it.
Go in there and get on income-based repayment. It might be 0. Just start. Like they literally gave you the gift of fucking 2 years of perfect payment history. This is a good time to pay attention to it.
Yeah. Manage the reporting. The reporting is most important.
So this is what I tell people. It's just a game. Right? Your credit score is a game that you absolutely can manipulate.
Yes.
You just have to know how to play the game, and nobody's taught how to play the game in school.
Never. No.
I'm more than happy to teach you to play the game because you can boost your credit score by opting out of pre-approved credit card offers. You can boost your credit score by calling and asking for an increased line of credit on your existing cards, but just not using it. You can boost your credit score by getting added as an authorized user to somebody else's account and never adding it. Yes.
I have one. This is, oh my God, this is why I send people to you to look at their scores. And I just did with a potential client. So one thing that you may not realize when people start wanting to clean up their credit without the help and eyes of a professional is they start paying old debts because logically it makes sense. You pay, I have this old collection from 3 years ago.
It's like digging up a body sometimes.
Well, and let me finish. You waken the beast that has been sleeping, and it doesn't always make sense to pay off that debt depending on how it is or is not reporting and for how long.
Right.
So you may think you're doing good by, I get all tied up because should you pay your debts? Absolutely. But I didn't make this game. You didn't make this game. This is something that's happening. And if the circumstance on something from 4 years ago that you couldn't pay then or forgot about is now that it will hurt you if you pay it, it might not make sense to pay it right now. And you need to talk to someone like Cassandra who knows how the game is played.
Yes, specifically if you're trying to buy a house. I mean, there's credit repair teams. There's not, I would say there's not loads that are reputable because many of them are scams. There's a few that are really reputable, but they are purpose driven Just so you know, there's usually a purpose. So I have a credit, my credit guy, and I was co-branded on the flyer, the very first one. I send people to him because I will say, I need this credit score for a mortgage. He knows what reports I'm picking. And they specifically choose the action to get to that score so they're mortgage eligible. I would say do say the name? There are a lot of companies that literally, I just saw somebody will take your money for years
Years.
and get very little results. And
Yes.
you're like, I'm paying. Oh, good job. Oh, but your
Yes.
score's not moving. And then
They'll
there's
take
also
your money
companies.
and pay your
Yes.
bills for you to like
But
it's
if they miss a payment, your
yes.
scores drop. So you could pay them on time, but they could pay all your other bills late.
And
I've seen that
okay,
too. It's
let's
awful.
go back to the words purpose driven. I think that is critical because if you are going to go to an entity who's going to fix your credit, know that that is not probably the goal you actually want. What you want
Right.
is a mortgage. What you want is
Get a fucking scalpel and get in there very specifically. You do not need to just do the whole thing. Most of the I don't ever tell people like, "Oh, it's all a disaster. You need to do all this." Most of the time I'm like, this, ignore all of those, but focus on this bits because I'm mortgage driven. That's my goal. I'm not trying to get her a car. I'm not trying to get her an 800 credit score. I'm just trying to get her or him, right? Um, Qualified to
yeah.
buy a house.
And your credit
And then I
score
can give long-term advice too, right? And that's what the second flyer is, long-term, monitor the stuff, keep a look on it, keep your balances low. Anyway,
credit score is illogical.
yeah.
Sometimes taking out more credit gets you a better score. Sometimes not paying debts gets you a better score. It's not
Don't
logical.
close your old accounts or your score will drop.
Even
Don't
if you're
pay
not
off
using them.
all of your collections or your
Yeah.
score will drop, right? Like all
Yep.
of it doesn't make sense. It's just a game. You just got to know the rules to play. And you didn't make the rules, so just reach
Play the
out to
game.
somebody who knows them. Yeah.
So I have a last question. Do you
Yes.
know, is it required for a creditor to report to the bureaus?
No.
So I remember
They
in the
have to pay
beginning,
to do it.
let's talk about that. But in the beginning of our careers, you had advised a client to get what is that? Where you buy pots and pans on a payment plan to boost your score. What is that company? They used to send out magazines.
Oh, Finger Hut.
Finger Hut.
It's a means to an end.
Is that company in existence so that people can practice using credit and boost their score?
No, but there are companies and credit cards that literally you can open. Matter of fact, in the My Credit Guide, there's a credit card that will report within 7 days and reports every week. So your scores start moving immediately. So
That's really smart.
Yeah, there are driven products for that, right? And so Finger Hut is, $100 case of diapers that would cost you $30 at Walmart. You have to look at the big picture and go, I'm buying this case of diapers and I'm going to pay it off in 3 months. And I have 3 perfect payments on my credit. Like it is literally for a specific reason, but they report to the credit bureaus and they report fast. So it's a step,
Yeah.
right? In
Yep.
the staircase of credit. And it's a really good first step because I don't think they deny anybody credit. The interest rates suck. Or it's not the interest rates suck. You're really overpaying for the product, but that's not the point, right?
Because what you're actually getting is a payment history that's consistent. It's an opportunity if you need it.
Yes.
Okay. What was the other thing? It just came out of what we were just talking about. Products.
That they have to pay to report?
Yes.
Yeah.
So if I am Chase Bank and I have 1 million of my credit card users out there, why would I pay Equifax to give them information?
Because in turn, they want information. So it's like all creditors have agreed they need to see it too. So we kind of all need to pay attention.
So by paying, what did I say, Equifax? By paying Equifax to give them information, I can also find out information about my buyer pool, my client pool.
Yeah.
So this,
absolutely.
before we even started this episode, I wrote down that, or maybe it was right at the beginning, that credit reporting seems to be like the OG of data as a product, data collection, metadata, right? Now it's everywhere.
I don't know that was the point. Like there are some credit unions that
it's not the
report
point.
every other month or
It was
every
just a
3
comment,
months.
not the point, just a comment.
Yeah, I mean, it really is. It started in the 50s and there was a purpose, but it does seem it collects a lot. It will tell me if it'll tell me addresses, it'll tell me old employers, it'll tell me if there's any variations in the social security number, if the person might be dead, if they're a junior, a senior, if there's a fraud alert. It tells me a lot of stuff.
Yeah, they went and culled all of the information and put it in one spot instead of having to hire a private investigator to go do all of the looking in all of the places.
Yes. And you can, as a consumer, you can also ask that your stuff be reported. You can enroll in, I can't remember the name of it. Basically
what does it do?
It links your bank account and they're going to report your utility bills. So it's a way to report stuff that you pay on time that wouldn't normally report to corrections or collections. To the credit report. Oh my God. Anyway, so like if I pay my garbage bill every month or my water bill every 3 months or my consumer's bill or my cable bill or Netflix or whatever, it literally looks at my bank account and goes, oh, she's been paying this for 18 months on time flawlessly. We're going to add that to her credit report.
There are a couple of them.
Increase your score.
You can opt into.
It's like an Equifax, or is it Experian?
There's CRScreditapi.com, which feels sketchy.
No, this one's from a credit bureau.
Yep, I'm getting there. LifeLock Advantage. These are the ads I'm being served. Free Experian, raise your credit scores. So Experian Boost. Experian Credit Lock.
Experian Boost. Yes.
And there's also something called Extra Credit from credit.com. Anyway, it's a product.
Experian Boost is the most.
Bankrate has one suggestion to self-report. How would you do that? What if I wanted to self-report my cell phone bill that I pay on time every month?
So the self-report is what Experian Boost is. You're literally saying, can you put my stuff in? And it's from what I understand and everything I've read, they literally tie it to your bank account. So you're giving them even more information.
Yep. There's always a trade-off. Nothing is free. The bank always gets their money.
Yep, always.
It's one of our guiding principles.
Anyway, I think we're probably fine based on the topic, and we did stray a bit, but what you see is not what
you get.
A creditor sees, and there are reasons behind that. So if you're wanting to buy a house or you're something like, call somebody who is well-versed in what that credit report looks like.
Yep.
And keep an eye on your credit report.
The report is different from the number. There is no uniform algorithm.
Mm-hmm.
Awesome. I feel like we armed some people with some information. So now go manage to your numbers. Yeah. With what did you say? That it is specific, something driven.
Purpose-driven.
Purpose-driven. So remember that your number is purpose-driven.
You're playing the game.
Beautiful.
Yep.
All right. Thank you. That was lovely. Thank you, Cassandra.
Yep. Bye.
Bye.
The info given is current as of this recording, but remember, the market changes and real estate is hyper local.